The Business Journal Roundtable Series is sponsored by Advanced Technology Partners.
What are some common pitfalls encountered in wealth building? For example, oversaving was mentioned earlier, and that wasn't something that I would have considered.
Well, there's two components to what we do. What we do for people is we plan and we optimize, right? So that could still be a good plan. And I think that's, to your point, I think that's what you were trying to say is oversaving isn't a problem in it of itself. You're able to accomplish the things on your list that you want to accomplish, but it's not the most optimal way to do it. You're pulling from resources, you're going to have RMD problems, you're going to have liquidity problems if you overstuff your 401k, and you could still get the money, but you have 10% penalties and ordinary income taxes on a traditional withdrawal before 59 and a half. So again, there's a large component of what's the most optimal decision to reach our overarching plan.
I think too, emotional investing. I think again, what we saw during COVID with the 30% drop in the market and people wanting to pull out, last month with the tariff talk. I think a lot of clients, what they do is a mistake, and what's a pitfall to them is that they see these, spikes in volatility, and the first thing they want to do is, for those maybe that aren't as seasoned investors, the first thing they want to do is take the money out to preserve that money, even though they may have already lost 15% of the account value. So I think emotional investing sometimes can be a large pitfall to a client, that's not as sophisticated in the market. So I think that's a financial advisor's job to kind of talk them off the ledge a little bit and explain to them, that volatility is normal, and it actually creates sometimes an opportunity to possibly add dollars and show them that they're well diversified and educate them on their portfolio and what the long-term investing is all about.
We're going to constantly go through periods like we did last month in one way or another, and they're always different. Interestingly, last month, the VIX, the volatility index, exceeded the level we had during COVID. That's how extreme the concerns were at that point. We had 2% and 3% market moves each day. So I think Stephen's right about emotions. You want to try to take emotions out. You want to remember what your plan is. With regard to oversaving, I think you have to build towards your goals. And what are your goals? And think about it. The happiest clients we have are not those that look at their portfolio value as a scorecard, but they look at it, money as a tool. It's there to take care of themselves, their family, and the things that are important to them. These are the people, I think, that are truly the happiest.
I would say one of the pitfalls is not having a plan if someone doesn't have an investment plan, because then they can be driven by emotion. They can be driven by trying to time the market versus, and there's the old adage of it's the time in the market, not timing the market. There's always volatility, but if you have a plan and you stick with that, it works out in the end oftentimes, as long as it's a good solid plan where you're working with your outside advisors, the attorneys, accountants, and financial advisors to make sure your plan's in place. And I think that as long as you're looking at it from that perspective, you can shut out the media, so to speak, the CNBC, where the price is up there every single day, you can see your net worth, versus when you own your house, you drive up to it. Some days, if you had a market value when you pulled up to it, you'd say, oh, it's a great day. And other times you'd pull up and say, wow, it's a terrible day, because it's not, the value goes up and down. And the problem with technology today is we can see our value every single day if you really want to. So shutting that out and saying this is planting a garden for the future and letting it grow, that's the best way to avoid those pitfalls.
The Business Journal Roundtable Series is sponsored by Advanced Technology Partners.